Good morning, students. Now we'll see the journey of GST. The journey of GST was started in the year 2006. Announced first was made by them Union Finance Minister during budget of 2006 to 7 that would be introduced from April 1, 2010. After that, in the year 2009, final discussion paper was released by the Empowered Committee. In the year 2011, Constitution 115th Amended Bill introduced and subsequently lapsed. In the year 2014, the Constitution 122 Amended Bill was introduced in Lok Sabha. The year 2016, the Constitution 101st Amended Act was enacted. First GST Council meeting was held on September 2016. In the year 2017, GST Council recommended the CGST, SGST, IGST, UTGST and Compensation Cess Act. The year 2017 of April, CGST, IGST, UTGST and Compensation Cess Act passed. Year May 2017, GST Council recommended at the rule 30th June all states except Jammu and Kashmir passed the SGST Act. In the year 2017 of July 8th, SGST Act passed by Jammu and Kashmir. CGST and IGST ordinance promulgated to extend GST to Jammu and Kashmir. GST is launched in the year July 2017. GST law from a constitutional perspective. The definition of GST is goods and service tax means any tax on supply of goods or service or both except the tax on the supply of the alcoholic liquor for human consumption. Article 366 subsection 12(8) says the definition for the goods includes all material, commodities and articles. For the meaning of service, anything other than goods introduced by 101 Constitutional Amended Act. State with reference to Article 246A, 268, 269, 269A and Article 279A includes Union Territory with legislative goods and service tax law while having unique principle has significant element of prior central and state law and is also inspired by VAT, GST, legislation of Australia, Malaysia, etc. Summarizing of existing tax. Bill passed by Rajya Sabha on 3/8/2016, Lok Sabha on 8/8/2016, notified as constitutions. The key feature is concurrent jurisdiction for levy and collection of GST by the centre and the state. Centre to levy and collect IGST on supplies in the course of interstate trade or commerce, including import. GST on petroleum, crude, high-speed diesel, motor spirit, natural gas and aviation turbine fuel to be levied from a later date on recommendation of GSTS. The central tax, additional duties of excise duty levied under Medical and Toilet Preparation Act, additional duties of customs, state tax, state VAT, sales tax, central sales tax, purchase tax, entertainment tax other than those levied by local body, luxurious tax, entry tax, taxes on lottery, betting and gambling, surcharges. The Central Taxes Administrator, State Tax Act and Rules Procedure, multiple state taxes administrators are multiple Act and Rules, multiple procedure. Pre-GST tax, these are the structure on India. The single tax GST, administration, uniform law, computerized uniform procedure. GST structure in India is CGST, SGST, UTGST, IGST. These are the exemptions from the GST. Alcohol for human consumption. Power to tax remains with the state. 5. Petroleum product, crude oil, diesel, petrol, natural gas. GST Council to decide the date from the GST will be applicable. Tobacco. Part of GST but power to levy additional excise duty with central government. Entertainment tax levied by local body. Power to tax remain with local body. The GST Council Constitution Article says Chairperson Vice chairperson to be chosen amongst the ministers of state government. The member of MOS Finance and the Minister of Taxation of each state. Council to make recommendation on everything related to GST, including laws, rules, and rates, etc. Threshold limits for exemptions is rupees 20 lakh. Compounding threshold limit to be 1 crore with for traders, 1 crore for 1% for manufacturer, and 2% for restaurant, 5%. Turnover limit recommended to be raised rupees 1.5 crore in 23rd GST Council meeting. Government may convert existing area based on exemption scheme into reimbursement based scheme. Separate tax 3% or 0.5% for precious metals category tax rate used. The GST Council decisions are to ensure single interface, all administrative control, 90% of taxpayer having turnover below 1.5 crore, 10% of taxpayer having turnover of below 1.5 crore, taxpayer having turnover above 1.5 crore be divided equally between central and the state tax administration. Exemptions from registrations to supplies of service making interstate supply up to 20 lakh, to supplies providing service through an e-commerce platform. Exemptions from section 9 sub 4 reverse charge and purchase from unregistered person. Introduction of nationwide e-way bill for interstate supplies from the 1 to 2018 and the interstate supply latest by 1 6 2018. Thank you.